Good afternoon. Thank you very much for joining us. This is Business Incorporated coming to you live from Lagos, Nigeria. I'm Chimeze Obi Iwagu. On the program today, Econet Wireless, Zimbabwe's biggest mobile telecoms company, reports a 10% fall in after-tax profits. Swiss shipping company Mediterranean Shipping Company signs a 35-year concession agreement with Ivory Coast's second port of San Pedro to operate its container terminal. Plus, the Mombasa-Nairobi standard gauge railway has been officially transferred to Kenya Railways Corporation. Let's get started now, and we'll begin with the markets here in Africa. In Nigeria, the drop on the shares of GT Bank had a ripple effect on other stocks, pushing the all-share index down by 0.41% at intraday. South African markets, the JSE index was also down by 0.86% at intraday. Egypt continues to wax strong, trading higher by 0.49%. Kenya closed in the red on Tuesday. And in the Middle East, markets were mixed as Brent oil's fall near $51.50 a barrel weighed on sentiment, though Abu Dhabi's Dana Gas jumped on hopes for legal action to recover payments from the Kurdistan regional government. Abu Dhabi's index had added 0.4% as natural gas explorer Dana jumped 5.1%. However, at intraday, the index was down 1.65%. The Dubai index was flat at 0.03% as 11 shares gained ground and 11 declined. Small and mid-sized companies generally outperformed, with Union Properties up 1.5%. The Qatar index fell by 1.61%, but Saudi was in the green at 0.16%. Let's see the Wall Street futures numbers coming out there. The stocks index futures there pointed to a relatively flat open today as investors geared up for more data while keeping a close eye on what's happening in the political sphere globally. The U.S. Central Bank is set to release its latest installment of the Beige Book, slated to come out at 2 p.m. Eastern Time. The report comes just weeks before the Fed is set to meet to discuss its monetary policy, with many analysts pricing in an interest rate hike at its June meeting. Sticking with the Fed, Dallas Fed President Robert Kaplan and San Francisco Fed President John Williams are both expected to speak at separate engagement today. In data, investors will be on the lookout for the latest Chicago PMI figures due at 9:45 a.m. Eastern Time, followed by pending home sales expected at 10 a.m. On the earnings front, Michael Kors, J. Jill, Hewlett-Packard Enterprise and Box are releasing their latest corporate results. And in Asia, stocks closed the session mixed after a cautious trade today as the British pound fell on new poll results ahead of the UK election and on better than expected official PMI figures out of China. The Nikkei 225 edged down by 0.14%, while the Kospi reversed earlier losses to finish 0.16%. The Australian ASX 200 ended the session 0.12% higher at 5,724.6. Chinese markets were mixed after the long weekend. The Hang Seng Index traded flat. Meanwhile, the Shanghai Composite edged higher by 0.24% and the Shenzhen Composite dipped 0.1%. This was just after the release of official Purchasing Managers Index for the month of May, which came in at 51.2 compared to the 51.0 estimated. Now we move over now to Europe, where political uncertainty has taken center stage once again. Our sterling dropped on political concerns after polls showed the UK Prime Minister Theresa May could fall short of winning an overall majority at next week's general election. There are also uncertainties surrounding the upcoming elections in Italy. Eurozone also released some major economic data. Let's bring in Ulrich Barth now, my colleague at the Frankfurt Stock Exchange, to digest all of these for us. Hello, Ulrich. Thank you very much for joining us. Now, two key Eurozone economic data, inflation and unemployment, came in sharply lower today. So why are the region's main stock markets in red?
I think they were in the red before the data came because of the political risks that have come to the forefront in the past few days. Worries about Italy, worries about the situation in Great Britain. You just mentioned the upcoming election with the majority perhaps for Theresa May no longer reachable. And that's just something that made its mark in the market. But since the data has come out, the markets have recovered. And now, as we speak, both the DAX, for example, for the trend here in Germany, and the Euro stocks for the trend of the Eurozone are clearly gaining. And the gains are broadly across the board. Inflation going down by 0.1% in May as compared to April at an annualized rate of 1.5%. Gives the ECB an argument to stay on the gas pedal with its monetary policy. In essence, a good piece of news for the market, as is, for example, the German labor market, which is seeing record employment and which is seeing unemployment down below the number of 2.5 million, first time since 1991.
Our German finance minister says France and Germany want to agree on a new common corporate tax system before elections for the French National Assembly next month. How significant is this move?
It's a major move. It's basically unparalleled so far. Two huge countries like this, the two powerhouses within the Eurozone, basically also within the EU, once Britain leaves the EU, putting together budgets and, of course, as a consequence, also putting together raising new debt and having to formulate a common financial and economic policy. That would be revolutionary. We'll have to see how it actually plays out in the next few months, because in both countries you have elections coming up in France now in June, and for the parliament, and the German parliament is elected in September. So it's very, very open what will become of this suggestion after perhaps new political landscape is formed.
Ulrich, there are reports that two Italian lenders, Banca Popolare and Veneto Banca, might be wound down. Is this news causing any jitter in the market today?
People are putting that on the back burner. It's not speculation one likes to see. Any talk of a bank going under immediately conjures up images of the bank run, perhaps the ripples turn to waves. I think so far people in the market think that these might be ripples that could be contained in Italy. But certainly this is something to watch. Italy is in trouble in many ways. The two banks are in trouble. The banking system is in trouble with too much bad debt on the books. And Italy itself also is hugely in debt and suffering political instability up to the next election. So Italy is a major worry, albeit today not a major one for the market.
All right, thank you very much for your time, Ulrich. Looking forward to talking to you again tomorrow.